Today we're going to talk about what type of charts is suitable for you. A normal candlestick chart, or do you want to use a lagging chart? There's quite a big difference in trading style using those chart, but then I prefer to use the lagging chart than normal chart. It's quite simple. As you can see here, we have a normal chart and a lagging chart. Lagging chart can consist of any charts that doesn't shows the most recent uh, price action. More like you can't say is the most recent price action. It's more like most recent price where the price is. It just lag. So yes, you can see this is Tesla. So yeah, from here we can see that the price bounce around a lot in the normal chart. This is the 200-day, 200 week. This is a weekly chart. So this the moving average over here. So when it goes down from here to here, you can see there's a lot of ups and down, a very uneven chart. But then if you look at the lagging chart, it shows the trend quite clearly, right? Shows very nice curves and everything, all smoothed out. Why do people want to use smooth chart instead of the normal chart? Um, in my opinion, that whenever a trend starts, it doesn't end immediately. So when a trend starts and it ends about 10 days later or 20 days later, so it doesn't matter whether you enter on the second day or the third day, you still make about 7 or 8 days of move upwards. So if you're trying to enter on day one, I'm not sure how you're going to determine where the chart is going. So if you think it's going up, if you have very good entry criterias, then maybe you can capture the trend on the upward move. But then, in my opinion, it's not that easy to determine the trend using a normal chart. As you can see, this one, there's a lot of ups and down, bouncing upwards and down. Maybe up for 2 days and goes down again, up one day and goes down again. But in the smooth chart, you can see that all it goes down is very smooth. You can see the momentum actually. So once you master using lagging chart, it doesn't really lags that much. You can see here, if you try to enter when the momentum starts slowing down here, somewhere around here, is before the main move upwards. So if you're trying to enter somewhere around here, you still make a lot of money when the move goes up, right? So it doesn't really matter. See, you can still make a lot of moves, strong moves upward when the momentum slows down here. If you enter somewhere around here, you start accumulating, and then it goes all the way up here and you exit it here. You still make these moves upward here. This is especially true when you can manage to catch these kind of big trends. So, yes, it lags in your entry and it lags in your exit, which I can cover it in another video. You can actually go down into a smaller time frame to make up or from the loss of your timing in the lesser time frames. Means if you look at the time frame, you know there's some kind of move upwards soon. As you can see, this one, a strong downtrend, and then this momentum starts drying up here. See, this is momentum dry up. So it's the same area as here. So if you start accumulating when the trend comes down here, and then momentum starts drying up here, somewhere around here, you start accumulating, and then the price shoots up to here. You still make a lot of money, especially when the trend is still going upwards. And you can go down to the smaller time frame to make the purchase here. So let's check it out. This is around March 17 when the momentum slows down, if I'm not mistaken. Um, yeah, it's April, somewhere around 7th of April. So okay, let's go back downwards. So you go down to the lower time frame, is this one. So when you look at the lower time frame, you know that the trend is uh after the big downward move downwards here, any rebound at that support area, you can sort of like start buying in. So especially when it's this kind of support, it has mixed support, just like here. This is a very good buy-in areas. Somewhere around here. You can start accumulating here and then wait for it to bounce upwards. So let's say you've accumulated your shares here and it bounced all the way up here. You're still making quite a lot of money. It's like if you're lucky, you manage to buy here, which we are most likely not that lucky. It should be around 250. So if you buy around 250 on average, it goes up to now is 352. So you make about $100 out of a stock. Based on your purchase here is 250, is like you make $100 per stock. So that's quite a lot. So if you're trying to trade this kind of stock, you start accumulating here, and then you're not selling here immediately, because you can see that after the move upwards, it's stair stepping. So you know that the weekly chart shows that it's still on the strong down upward trend. So there is a chance that it will retrace. It will retest this area. So if it goes all the way up to retest this area, which is possibly in the 400 plus, let's take it at 450, yeah, instead of 478 or 480. So we take it 450 and you enter around 250. So it's a very good move upwards. You will make a lot of money doing this kind of trades. So yeah, lagging charts needs some skill. You have to go down to the lower time frame to time your entry, like this one. So this is consolidating. After the move upwards, it consolidates. I think you can see it on the normal charts as well. So after the moves upward, you're consolidating here. So this move upward, consolidating. So which one do you think it shows that the consolidation and the move upwards, the trend, which one shows better in your opinion? Do you think this one is the I think we should change this color. Let's change it to something green, lighter green. Okay. Oh, what? Let's put it just purple. Purple. Let's do it purple. All right. So here the consolidation, it looks is very big, right? So you can actually see that the consolidation area is here. It's much more better than this one. It's obviously better. And then stair stepping is way up again, like here. So which do you think looks good in your opinion? Smooth lagging chart or the normal chart? So let's check out the weekly again. Okay, let's align it well. So if you look at the normal chart, if you're trying to time this entry upwards, you know that there is some kind of support on this moving average line. You can see in the past it respected it many times. See, so you're almost certain that when it goes down here, it's most likely to bounce around and then goes back up. Or if you're trying to catch a long entry, just put a stop loss here and wait for it to move upwards. Oops, there's some kind of horn. So when it goes up all the way up here, you can take profit. Or if you yeah, I suggest take profit, because it's most likely to have some kind of pullback and then go back up again. So you can just take profit. uh, this shows that the lagging chart somehow, if done correctly, you will make money compared to the normal chart. Normal charts, there is a disadvantage. The bounce is quite serious. You can see that when it goes down here and then goes back up and bounce around a lot, it does confuse your judgment. Meanwhile, if you look at here, you can actually see where the momentum actually slows down. So this is a very good entry. As you can see, the momentum slows down, the candle gets smaller and smaller. So you know that this is a good entry point for you. So if you are still undecided, if you still think that the normal charts is suitable for you, you can um, use two charts together, just like this. Just overlay one on top of the other, and you will see that where the trend is heading is going down here and making support areas here. You can actually take advantage of both the charts, one for entry and one for the trend and the momentum. If you see this, the momentum is slows down, and you can time your entry here, and supported areas goes back up, so you make money. It's that simple. It's not that difficult. I previously mentioned in my shorts, and also I think I did a long video about Tesla. Tesla is I mentioned that when the momentum slows down here, you should enter here. I was using the lagging chart. I prefer to use lagging chart actually. This normal charts confuses me a lot. I used to trade using normal charts, and it's horrible. It's uh, it's too confusing. In fact, you can't see the trend well. So I prefer to use lagging chart, even though it lags a little bit. But then all moves that begin won't end immediately. A good trend will always continue going upwards. See, if you enter here, where the momentum actually changes color, is actually here. So if you enter here and it moves all the way up here and maybe up all the way up here, you still make a lot of money from these kind of trades. So do not be afraid of trading using lagging charts. A lot of people think that lagging charts somehow distorts your entry and everything. You can always go down to the smaller time frame and time your entry using a smaller time frame, like just now I mentioned that this weekly chart. So you go down another maybe hourly chart or daily chart, time your entry there, and any rebound or sign of rebound is a good entry if you're going long. So yeah, I try not to make this video too long. Um, what else do we should know? Okay, Tesla. Let's do a small analysis of Tesla. Right now, it's still on uptrend, the weekly chart. So the long term is on uptrend. It has been going up for a couple of weeks now, a month, I think, a month plus. So it's a very good sign. It will continue going up unless you can see. For now, we can see that the momentum slows down slightly, but it's not too worrying. Momentums do slow down once a while, but then it will pick up later on. Most importantly is it respects this moving average, is still above it. It's a good thing. Uh, Daily chart, it shows that it's at a resistant area. So it's not surprising that this area, you see, is a resistance area. So it's not surprising it's facing some kind of resistance here. If it breaks above it, it will most likely retest this area, or maybe here in the intermediate level. So it might go here, then go down, test here. So yeah, you can see is this one This is the area we are talking about. These areas. So these areas as well. So yeah, this is immediate. You can see this part. It actually negates out. It's sort of like a smoothen out this part. So we won't have to the worries of it. This is this a resistance area. So if you look at the smooth chart, you actually sees that okay, this area, which is this area, and this area, which is this area. So these are the resistance area. It clearly shows itself up. This area is not a resistant area. You can see there's no significant stand out from this chart, the smooth chart. So it does shows where the resistance and support area very well. You can see this area, this area. So basically, it shows where it is, all the support areas and resistance area like this one. Yeah. So it does, this shows quite a strong one. So where do you think it will go? In my opinion, Tesla might be bouncing a bit before going upwards. Yeah. So we'll see how Tesla will go. But then for now, Tesla should be going up, in my opinion, which can be wrong. Uh, CIS in Japan actually said that after 20 years, he only make out of 10 times, he is wrong about 4 times. And he is someone who trades a lot. So yeah, if you are trading a lot and you say that you still make mistake, you still lose money in the market, that is completely normal. Just make sure you keep your losses small, cut your losses. If he's wrong, then yeah, it's just part of the game. If let's say okay, let's say in this weekly chart, we already know that the momentum slows down here, so we entered here. So if this price, instead of shooting up and it breaks this and goes down, we'll just cut our losses because we put our losses somewhere around here. So if it breaks this area, we'll just cut our losses, keep our losses small. Somewhere around here, maybe it's just a small loss. Any big moves upward will just make it all back. So yeah, keep your losses small. Don't be afraid of making losses. A lot of people lost a lot of money because they hold it for too long. Like let's say you enter here thinking that the market will continue going upwards. So you don't even know what you're doing here. So you just buy in here, and then you wait, and it falls down, and you're having nightmares. And it goes back up again, and you're having hopes. And then if it goes down from here again, you'll be holding this thing up and down more. You feel very stressful. Down more, you feel sleepless. Yeah, it is a very deadly game, especially if you try to average down your entry by throwing more money into the market, into your stock. So you will lose a lot of money if you do that. So be aware that do not hold on to your losses, cut your loss. So like here, if you buy somewhere here thinking, hoping that the market will continue upwards, and then the first sign of a red candles appearing one or twice or three times, especially when it breaks below this moving average, is a very dangerous sign that you are going to lose money. Just exceed it and you'll sleep better this way. Exceed it and just find another better entry and goes back up. Uh, I will link my previous video about psychology, trading psychology. You can just go through that, and hope you can learn something about how a trader will encounter this kind of problem, what emotions they will go through, and everything. It's not a fun thing, actually. It's not a fun thing. Um, Most people will show how much money they make, They won't show you the losses. So I'm just being frank. You will make losses. There's no doubt about it. You will make losses. You will lose money. But then make sure you cut your losses small. Make it small. Do not let it run. While you're holding to your gains and not your losses. Do not hold your losses. It will kill you someday. Not from losing the money, but most likely lack of sleep. You will be having some nightmares and everything. Every time you hear the name of the stock, you feel like you want to puke. So yeah, do not try to hold losses on average down. Most people will try to average themselves out of the loss. It might happen. It might make it all back if you're correct, if you're lucky. But most of the time, big losses will come from these kind of actions. If you try to average it up here, your average price will be somewhere around here and goes back up here, you're happy, you're making some money. And then when it breaks down below it, you will be having a lot of sleepless nights. And you'll be stressing what went wrong. Why is it that every time you are losing the money? So yeah, let's not make this too long. I'll try to make another video about averaging down, whether it's a good idea or not, which I don't think is a good idea. So yeah, I'll make the other video as soon as possible. Just subscribe, share out my video, and remember to give it a like. Anything you want to ask, just write in the comment. And trade safely. Subscribe. Most importantly, subscribe and watch all my previous video. A lot of information in my videos, but I think not much people are watching it at the moment. Just try to watch it, learn something from it. You may not agree with what I say, but then I've been trading for 20 plus years. So yeah, just trying to teach someone something out of these things. So just watch through all my older videos. Okay, all right, that's all.